Salesforce stock is in the process of tanking. It's down 14.5% right now. They just released their earnings and the stock continues to fall. Every minute it seems to go down another percent. Now that's a bummer in particular because Salesforce isn't just a stock I commentate on, it's a stock that I actively own. I have this one in my portfolio. If we look at the passive income portfolio, I have concentrated positions into 12 different companies. One of those 12 companies that I've been accumulating, it's a new one, I've been buying into it, is in the tech category, and it is Salesforce. I'm already down a bit on this one, down $3,000. And if this minus 14% sticks, I'm going to be down around $7,000 or $8,000 in this stock. So it's going to be one of my worst performing, in fact, my worst performing stock in my portfolio by far. So we're going to go over all of this. We're going to take a look at what's going on with Salesforce. Why is the stock tanking? It's down almost 15% now. What happened here? What's causing investors to give up on Salesforce? We're going to be going over all of it in this episode. Let's go ahead and jump in. So let's take this from the start. First of all, the biggest question, why are investors selling out of Salesforce? Why is the stock down 15% today? Stocks sell off for specific reasons. They don't just do it randomly. They do it because investors received new information. That's why it's down 15%. They released their earnings report, they released guidance, investors looked at that and they saw something they didn't like. What investors didn't like is their guidance. That's what's causing the stock to sell down. For example, if we look right here, 9.25, this is what Salesforce guided for next quarter. They guided between 9.2 and 9.25 billion in revenue. Wall Street was expecting guidance of 9.35. That's above the top end range of Salesforce's guidance. So investors were expecting this and they got this. What they got is not as good. Salesforce underdelivered with their guidance. When a company like Salesforce, that's very volatile, that has a lot of momentum, that has a lot of investors going in and out of it, when a company like this gives underwhelming guidance, when it doesn't meet Wall Street's expectations, this is what happens. So right there, that is the simple reason the stock immediately sold off. The stock's guidance did not match expectations. Now, of course, that's a bummer whenever that happens. I'd like every stock of mine to always raise guidance and beat estimates, but that's not the reality. Many great companies, whether it's Amazon, Microsoft, Google, they routinely have missed their guidance at one point or another. They go through sell-offs and eventually they recover. Some of them are going to have this happen from time to time. What I like to do is put the rest of this in context. Wall Street likes to look at things quarter by quarter, and anytime there's any little interruption, they get scared and sell out of the stock. What I like to do is look at the broader picture, the broader context here. If we bring up Salesforce's earnings report, this is the most recent one. They give us a nice summary of how things are going. Let's go ahead and just take a look at some of the top items here. The first thing we can look at is their performance of this most recent quarter. So forget about the projections for a minute. Let's go ahead and just take a look at what actually happened. Their revenue and earnings per share were a beat of the estimates. Their revenue grew to 9.13 billion, up 11% year over year, and that's on a constant currency basis as well. If we look at that 9.13 is their highest revenue ever. So they reached an all-time new high revenue, up 11% year over year. That looks on track. So I like the revenue growth. I like the operating margins. I also like that they point out the current remaining performance obligations of 26.4 billion is up 10% year over year. Performance obligations are like contracts that other companies have to do business with Salesforce. So it's revenue that Salesforce has not yet recognized. On Qualtrim, one of the KPIs we have is total performance obligations. So we can look at this most recent quarter and see that it's now at 53.9 billion, which is far above where it was 4 quarters ago at 46.7. So that's a nice increase in contracts to do business with Salesforce. Now the next one's a big one here. They point out that the free cash flow this quarter was 6.08 billion, up 43% year over year. The free cash flow chart on Qualtrim has not updated yet. It'll be updated in like a day or two. But if we look at this, 6.08 billion would put this right up here. This is going to be a huge quarter for Salesforce. So they had a 40% increase year over year. That is a massive step up in free cash flow. So everything they did this most recent quarter, I like to see. They're growing revenue, holding margin steady, growing their free cash flow, doing buybacks and dividends. That's everything I can expect from the company. The problem comes in with the guidance. The guidance is mixed. And investors hate that word mixed, especially for companies that are priced with a high multiple. So Salesforce has a high multiple going into earnings. Investors are expecting raised guidance. They're expecting very strong guidance. They're not expecting mixed guidance. Here we get into the full year guidance for this year. Now with the revenue guidance, they move the guidance up 7 to 8%, but not as much as Wall Street expected. Again, Wall Street was expecting 9.35. They guided to 9.25. That's a miss. That's going to cause the stock to sell off. This one's a little odd. They lowered their full year operating margin guidance, but they kept their non-GAAP operating margin guidance. You can read that how you want, but investors aren't going to be happy about that. Again, anytime they're lowering guidance at all, investors are going to re-rate the stock, which is what they're doing now. On the bright side, they are maintaining their full year operating cash flow guidance of 21% to 24%. So in summary, the most recent quarter was really good, growing revenue, growing free cash flow, doing buybacks, doing dividends. That's everything I like to see, but they issued weaker and mixed guidance, which investors do not want to see in this environment. So the stock is now down around 17%. It's getting punished. If you're new to the market and you haven't had experience in companies like this can be a little startling. It can be a little frightening, like you're doing something wrong. My opinion on this company and these earnings is I feel no stress in the situation. I thought that this was actually pretty decent earnings. I realize they have mixed guidance. I don't think it's crazy the stock is selling off, but I'm not concerned about this at all. When I look at Salesforce, it's pretty simple. I'm just going to be buying more of the stock. I really am. I'm going to be putting in a small order tomorrow, and I'll be buying it throughout the week next week. I just think Salesforce is a winner. I really do. This doesn't change my mind. A single quarter of mixed guidance does not change my thesis overall on the company. Salesforce is a highly profitable, dominant enterprise cloud business in 5 different business segments. When you look at all of them, this is with the most recent quarter added in. It's growing year over year and quarter over quarter. Steady growth across all of its business segments. I like seeing that growth. And then with the free cash flow of $6 billion this quarter, that is a massive step up in cash flow. This company's not being disrupted. They're not being taken over. The fundamentals aren't falling apart. The company's growing slightly slower than investors expect. So this isn't a fundamental problem with the company that I consider so dire that it's deserving of selling. In my opinion, I'm going to be buying more of this stock. And in terms of the stock going down and that being a bummer, I'll have a red holding in my portfolio. I've been there before. This is a situation I've just been through a time or two. I've been through Amazon being down almost 50% in my portfolio. This was a massive loser just a couple years ago. Now I'm in the green by $18,000 in Amazon. Netflix was another company that was a massive loser in my portfolio for a time. The stock sold down 70%. There's other YouTubers making videos mocking me, saying that it was a horrible stock pick. And now Netflix is racing back up to all-time highs, in the green, $22,000. Now I'm not saying it's a guarantee that Salesforce will do great. Maybe this company really will turn out to be a big long-term loser. That could be the case. But based off what I see here, I don't believe it. I still think Salesforce is a winner. I'm going to be buying more of the company. Not suggesting any of you do it. Do what you want with your own money. But I'll be buying this dip pretty aggressively. I still like the company. I like the fundamentals. I like the market structure. I like where it is right now. The mixed guidance does give me some pause. Maybe we'll have some slower growth. Maybe the company will have to just do some buybacks and take it easy for a while. But overall, this is not a derailing of my thesis. So as far as I'm concerned, I'm going to be buying the stock. Let me know what you think. If you have a disagreement, that's okay. Let me know what you think in the comments, and I'll see you in the next one.